Yes, I think Coinbase stock can get to $1,000 per share by 2030, and that may sound crazy right now, but shares are already up from about $60 a share when I started buying them for the asymmetric portfolio to $260 per share today. And the company is just getting started. I think the momentum for the blockchain and stablecoins, all the things that Coinbase is doing, is just getting started. Despite shares being up 312% since starting my coverage of Coinbase on Asymmetric Investing, I think there's a lot of runway ahead for this company. I'm going to dig into that today, everything you need to know about Coinbase stock. If you want more from me, check out Asymmetric Investing. There's a link on the screen and a link in the show notes. That's where I'm providing my portfolio, all of my research, and every single stock that I buy every month. I buy stocks once a month, and I hold stocks long-term, stocks like Coinbase, like Spotify, like Hims and Hers. These are phenomenal performers, and it's those 10x stocks that are really going to drive your portfolio and your outperformance of the market long-term. So check that out if you're interested in outperforming the market like the Asymmetric portfolio has. And thanks to this video sponsor, Fiscal.ai. This is the old FinChat. They have changed their name to Fiscal.ai. This is a phenomenal research tool. They have all of the financial metrics that you need to know. They have transcripts, earnings reports, presentations. The thing that I love about Fiscal is their KPIs. I'm going to use that throughout this video. You're going to see how I use them in companies like Coinbase to understand the inner workings of a company. Just a phenomenal tool, and you get great charts from Fiscal.ai. And through my partnership with them, you can get 2 weeks of their pro version for free and then get 15% off through fiscal.ai/ASYM. So check that out if you're interested in upping your research. Let's dive right into Fiscal with this chart with Coinbase. This is the first thing that I want to cover, because if Coinbase stock is going to basically 4x from here, a few things are going to need to happen. We're going to need to continue to see revenue growth. We're going to need to see probably margin expansion and maybe even some multiple expansion. So how can revenue growth in particular grow about 4x in the next 5 years? That's a little over a 30% growth rate. This is an area to start with. I'm going to get to things like stablecoins and trading in just a second, but this is all of the infrastructure pieces from Coinbase. You can see blockchain rewards, interest and finance fees, custodial revenue fees, other subscriptions and services. And these have been kind of volatile over the years, but since the end of 22, let me just change this to the end of 2022, you can see that there's been a ton of momentum in these businesses. And you look at each one of them, the only one that's not growing at a 30% plus rate is interest and finance fees. But blockchain rewards are growing, custodial fees are growing. Remember, Coinbase is the custodian for most of the Bitcoin ETFs. That's going to probably be the case as more ETFs come online from all kinds of different cryptocurrencies. So that's going to be another infrastructure piece they're going to pay. And then subscriptions and services. This is all kinds of stuff that Coinbase does. This is their wallets as a service, their payments products. If you go to the Coinbase website, you can see things like they have a credit card. You can earn money from staking. Developers have a whole bunch of tools that they can use on Coinbase and with all kinds of different blockchains, not just the base blockchain. So a lot of different ways that they could expand these revenue sources over the next 5 years. Is a 4x for each one of these revenue sources going to be possible? Probably not. But as a group, I think these are the kind of infrastructure services that more companies are going to lean on Coinbase. You already saw a partnership between Shopify and Coinbase. I'll get to that a little bit more with the base blockchain in just a second, but this is going to be the company that everybody turns to. You know, if you want to do something on the blockchain, who do you go to? You're not going to go to Binance, especially if you're in the US. You're going to turn to Coinbase. That's going to drive all of these services going forward. So I think this is going to be the foundation of the business, is Coinbase starting to be something like the AWS of the blockchain. The second thing may actually be the most important thing for Coinbase financially, and that is stablecoins. Their stablecoin revenue primarily comes from their partnership with Circle. They started the USDC stablecoin with Circle a number of years ago, and that has become the second biggest stablecoin and arguably the most important stablecoin, at least in the US, and it's growing extremely quickly. I'll get to some of those numbers, but just look at the revenue that Coinbase is generating from the stablecoin. You can see that this is up 38% on a compound annual basis since they started reporting these numbers on a trailing 12-month basis in the middle of 2023. So now over $1 billion in revenue. The strange thing about the USDC stablecoin is Coinbase actually generates more net revenue from the stablecoin than Circle does. Circle shares 50% of the revenue that is not on the Coinbase ecosystem. Coinbase gets to keep 100% of the reserve revenue from the Coinbase ecosystem. And Coinbase doesn't really have any costs that are associated with those revenues either. So the profitability of the USDC stablecoin is going to drive to Coinbase. And how much is that worth? Well, if Coinbase is generating more value, more profit from the USDC stablecoin than Circle, then you have to assume that that stake should be worth over $30 billion. Now, I think Circle is very highly valued right now, but that's sort of a proxy of what the market thinks of the stablecoin business right now. So Coinbase, with a market cap of $62 billion, enterprise value is under $60 billion when you consider their balance sheet. There is not a lot of value in excess of just the value that's sitting on the balance sheet today from the USDC stablecoin and the revenue they generate from that. And the momentum for USDC, that revenue should continue to grow. There's two ways that USDC stablecoin generates revenue. One is by just how big is the market cap? How many assets are outstanding? That has grown about 2x in the past year to about $60 billion. I think that's going to continue to grow as more and more transactions move on chain. The other thing that is going to drive revenue is interest rates. What are short-term interest rates? If those rates fall to 1%, that's going to hurt stablecoin revenue and profitability. But interest rates are relatively high right now, and I think that's going to stay that way for the foreseeable future. I wouldn't be surprised if this segment does grow in excess of 4x over the next 5 years. That's how much momentum we have in the stablecoin business. The third thing, trading is still going to be a big business. Let's look at these KPIs. And you can see here, this goes all the way back to 2020. You can see that 2021 really was the banner year for Coinbase as far as trading revenue goes. But this business that we have today, 2025, $4.2 billion worth of revenue in trading. This is both institutional and consumer trading. But I think this is a much more stable business than these YOLO days of late 2021. So I think this is going to be the kind of business they can really build on top of. They got a prime business with institutions. You're seeing more transactions on chain that's just moving money from one cryptocurrency to maybe a stable coin. That's the kind of transactions in the background that we're not necessarily even going to see that are going to happen on the Coinbase ecosystem. And that's something that's going to be a little bit like bank transactions, where there's just a small fee for that. I think that is going to continue. There will obviously continue to be trading in futures, options, all the things that Coinbase is trying to get into and expand. So can this business 4x? Maybe not over the next 5 years, but I wouldn't be surprised if revenue does double or more for the trading business. And again, this isn't necessarily the thing I'm most excited about with Coinbase, but it is a pretty stable revenue source at this point for the company. The final thing to be really excited about with Coinbase is the Base blockchain. This is the blockchain they built. It's a layer 2 on top of Ethereum. And this is where there is optionality for the business going forward. I talked about the infrastructure that they're building. This is a piece of that infrastructure. So when Shopify announces that they're going to be accepting USDC on Shopify, what they're doing is they're using the Base blockchain, and Coinbase is helping create the smart contract and helping all of the infrastructure behind the scenes work properly. So there's going to be a lot of support of crypto wallets. Again, Coinbase has its own crypto wallet that is apparently going to be improved in the very near future as well. But the Base blockchain allows for a place for Coinbase to have developers building new things on top of what Coinbase is already offering. And that's what you want to do as a platform company. You don't want to prescribe everything that's going to happen. You want to be able to build the tools and then have other people be able to innovate on top of it. So when companies like Stripe and Shopify get more into the blockchain, they're using at least some of the tools or some of the tokens that Coinbase is going to generate revenue from. Where exactly is that going to go? We don't really know. I think that we're going to have more and more investment trading, so stocks, bonds, maybe prediction markets on the blockchain, and the Base blockchain could be a place that trading occurs. We could have more NFTs, not necessarily the NFTs you think about from 2021 or 2022, tokens that denote that you own a certain asset in the digital world or even in the physical world. That's the kind of innovation that has been coming for years, but it hasn't really hit mainstream yet. Over the next 5 years, as those products go mainstream, that is going to drive the revenue growth for Coinbase. So I think you add all of this together and Coinbase is a relatively good value, especially when you consider the stake that they have in Circle, not only the stock, but also the USDC token. That should be worth well over $30 billion based on the way that the market is valuing Circle today. And the rest of Coinbase's business continues to have a ton of momentum. I think this is a company that can 4x its revenue. And then even if the multiple stays where it is, price to earnings multiple is 45, enterprise value to sales is 8.8. I think we could see margin expansion. I think we could see a little bit of multiple expansion with this enterprise value to sales multiple going up between 10 and 15, especially if the company's growing at 30% per year. But there's a lot of opportunity for growth, for margin expansion, and multiple expansion for Coinbase. That's why I think the stock can hit $1,000 per share by 2030. And I have my money where my mouth is. This is one of the bigger holdings in the Asymmetric portfolio. If you want access to that whole portfolio, I will put a link to that in the show notes. So check out Asymmetric Investing, and of course, check out fiscal.ai. This is what you've seen throughout this video. A phenomenal tool for investors who are looking to get more out of their research. Just a phenomenal tool for investors who want the most that they can get out of their research tools. Let me know what you think about Coinbase stock today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.